Hi, my name's Michael Scherini. You're here with another episode from Scherini Lawyers in our YouTube series. Today we're here with PJ. Thank you for joining, PJ. How are you?
I'm very good. Thanks for having me, Michael. Thank you for allowing me the opportunity to join you and on your YouTube channel.
Oh, my pleasure. My pleasure to have you on. Now, would you help me by just giving me a little bit of a rundown about what you do with yourself, PJ, and in your profession and your everyday practice?
I am the principal of Elixir Wealth Advisory, essentially comprised of several other companies. We're specialist tax accountants, financial advisors, and management consultants for doctors. I've personally been working with clinicians for over 18 years in different capacities, from institutional banking. And Elixir came about in 2007. During this time, we've been serving medical professionals, their businesses, corporate enterprises, private agent care businesses, and so on and so forth. Next step and aspiration is a Victorian tax bar. So I've always had a passion solving tax problems, generally in a more complex setting. I will be undertaking the readers and additional training this year to join the bar and start off as a junior barrister.
Yeah, fantastic. Yeah, and look, we all have the benefit as well in our profession these days of AI, and that certainly helps supplement our practice. And we've talked about on these episodes how important it is to embrace it responsibly and use it to empower
So
you and empower your clients.
I personally do think AI will have a great impact in professional medicine, especially at the level of primary care and making simplistic decisions at the level of primary care when it comes to those things. So that's definitely in the forefront of my mind as well as my clients. It's driving them to be a little bit more deliberate about their finances and their planning, and not so much from a point of fear, but more so around point of they'd have to reinvent themselves eventually, and or take very deliberate steps in order to tidy their monies and their asset base and their businesses and their operation, not to remain susceptible to those up and coming wave of changes that we will see in our lives very, very soon.
Yeah, well, you think a lot of doctors, they're brilliant clinicians, and you can't doubt that. But owning a practice is a completely different skill set. You can have busy practice, strong billings, but you can still be exposed legally and financially if you don't have your legal affairs and your tax affairs set up properly and with the right advisors. Isn't that right?
There was a time where there was this whole debated area of goodwill in owning and operating a medical practice. As you would know, as a practitioner myself, the premise of a scaling a practice is very limited. Therefore, my view always been maintained as, a practice can grow to become an extremely viable cash flow producing machine. And then you would want to sort of really have your structures and affairs very smartly set up in order to translate those cash flow into more evergreen assets. My whole premise of pitch and advertising to doctors is, look, what you think is worth 500,000 because of the works and improvement you've done to it may not necessarily be worth that in 10 years. So therefore, what's your plan? What's your exit strategy? How do you manage risk? How do you manage, issue of other partners joining or you exiting as a key person into the clinic? And as you rightly pointed out, day to day, I work closely with doctors and their legal advisors, such as yourself, about those issues.
Oh, look, yeah, I agree. And I think today we're just going to unpack very briefly the legal and financial traps that doctors and practice owners they often miss. What makes medical practices different from other businesses? Um, let's start with the basics. Why is a medical practice not just another small business? There's obviously a lot of things that need to be considered. You've got things like heavy compliance environment, people, heavy business, doctors, admin, nurses, contractors, sensitive data and privacy obligations, which are extraneous, complex billing and cash flow cycles between the practice and the persons working in there. This means legal risk isn't just in one place, it's across the contracts, the staff, the privacy, the regulatory issues, the ownership structure. And, I quite often see and review documents that look as if they've been sort of drafted on Microsoft 98 and never updated, these old sort of contractor agreements and so forth. And it's pretty clear to me that, the legal side and the compliance side is often neglected in these practices, and it's usually because they're just busy. These people, they're like you and I. We're always busy. You get caught working in the business, then on the business, and it's not because they don't care. It's because they don't necessarily realize it until it becomes a problem.
Absolutely, I agree, Michael. And to that point, probably just adding a little bit to why is the medical practice is a little bit different to other ventures and business operations, because it heavily relies on the exertion of the key man. Generally, there's one or two central principles around a clinic. So take it, whether it's a primary care or a specialist center, they're the ones who sort of work the business up, sort of build a little bit of a patient base and attract sort of the idea and the premise of other doctors coming and seeing those patients or work through that patient database. Consequently, it heavily relies on the existence and exertion of a principal practitioner, and therefore that, in my view, inherently puts restraints on how much a business can truly be scaled. To your point, I guess one of the traps that doctors fall into when they start a business is very much sort of these purported solutions or groups that they say, well, we've got everything ready in one umbrella. You call it Scale My Clinic, or otherwise you're trying to scale something inherently not scalable. And then therefore the use of templated documents, the use of just utilizing the random stuff they find to extend an employment agreement. And as you pointed out, these instruments are just as good until something goes wrong. And just literally before our conference, we've been dealing with a matter that there's really no proper instrumentation by way of a unit holdership agreement, and the clients are in major dispute, limited ability for a client to get the other director out. And one party is working very, very hard to build a business. The other party is just doing his own thing outside the business. And when it comes to the sort of junctures and sort of points in business, which inevitably will happen to all of us, that's where you've got major problems. That's when things are costly and out of control. So they sort of think, well, look, I might save myself 20 grand legal fees to not to need to worry about this because my friend used the same sort of setup. Oh yeah, well, yeah, my friend's got a similar thing. I want to set up supposedly a unit trust and I want to operate it that way. But little they know is, the function of those deeds and all of that in every single client is very different.
So one of the first traps is structure. What are people getting wrong at the start? And you've touched on it there. Wrong entity for the stage of the business. And then you might have other issues as well, like no separation of business assets and personal assets, tax decisions made too late, bringing people in informally without thinking about ownership or control. You've touched on them, and that certainly comes into your expertise as an accountant and also financial advisor. And, you've got the legal side of things as well, as you've pointed out as well. You've touched on, no proper shareholders agreement or unit holders agreement. So there's no design, there's no structure on how to deal with disputes or how people come in or out of the business, which always means that ultimately you either have to negotiate it or go to the Supreme Court generally, and that's an expensive exercise. No clear service agreements, as I touched on, service contractor agreements, old, outdated, look like they've been redrawn or redrafted multiple times and maybe not with legal advice, what I've seen. So repurposed documents are never good. You've got no documented decision-making process. How are decisions made? Are they just made arbitrarily, or is there some structure? And the number one issue with not just medical practices or businesses, but we'll work it out later. Don't worry about it. We'll work it out later. And that's because everyone's busy and trying to do their job, do a good job for their clients and look after their health, look after their patients. And I totally understand and respect that immensely. However, you do need to make the time to work on the business, and you need to put your trust and faith and confidence in the right people to look after your business, people who are switched on, fast, reliable, consistent. And that's, why they talk to people like yourself. get the quality of service and the speed of communication, and they get calls back and they get replies to their emails. All these things that you think are common, which aren't actually that common in professional services there. So, these are the most important things when you're looking for. And if you're not getting those things from your lawyer or your accountant, it's time to change. You don't need to put up with it. Medical practices and doctors out there, and you're paying money for a service and you deserve the best. And it's as simple as that. That's the way I look at it, PJ.
To that point, Michael, you see, there's the level of due diligence that especially is undertaken from a numbers point of view. And sometimes doctors think, well, the numbers add up. Now I'm ready to go ahead. But how good is the lease? As a lawyer looked at it, how good is these agreements? How good is the indemnity clauses? What are you actually buying? A lot of these sort of recognition of practice incentive payments may well and truly be tied into that entity. Is this even a good idea to buy this entity? What are the risks associated with those? And then you've got a whole raft of issues of contracts. What if there has been a misconduct and a mistreatment of an employee? What are those risks? And a very good case of sham contracting that you've been sort of litigating for one of our clients lately. So the risk isn't there until there is. And generally, the business model is very simple. A principal doctor comes in, cultivates a hub for patients, attracts other doctors. Now there's a whole contractual issues there. And then the moment something goes wrong, all of these engaged clinicians and the people that you inevitably would have had to hire to run the operation, they've got rights. And what are we doing about those? How strict are your contracts? How properly and well drafted those agreements? And in absence of them, I guess I've been proven, Michael, in that probably over the tenure that I've been working with doctors, it's always a matter of time. It's generally if there has been a sloppy situation that they sort of said, oh, look, I'll deal with this later, or, well, I don't think this will happen to me. Often it does. You can't sort of quantify the risk of running a business to chances. You do it methodically, you do it properly, and then purportedly this asset of yours that's going to mean something or a goodwill that you're building, then it's preserve its value. It'd be a much better platform for you to exit, because there is a good chance that the moment you are talking to another person who's got probably half-decent accountants and advisors such as ourselves, that they'd be scrutinizing those businesses like the way we do. And they're advising their clients about all the risks and go, well, yeah, numbers look good, but your leases are sloppy, or there's these contractual issues, or actually these things are not done properly, and therefore these are the risks.
You need to get down into the detail to make sure that you're across everything and that you've done your due diligence as an advisor, and to really act in your client's best interest. So in particular, the one example that you gave there was the contractor v. employee disputes, which gives rise to potential sham contracting claims under the Fair Work Act 2009, which is a federal piece of legislation. Now, one thing that people assume is that the label on the agreement is everything, but it's not. The arrangement, if it doesn't match the reality, there's really exposure there for medical practices. And the main risk areas that we get is payroll tax risk. As I've touched on, contractor versus employee. Is it really a contractor, or is it actually an employee that you're dressing up as a contractor? And then you can have issues with sham contracting, compensation and so forth, and legal proceedings, potentially in the federal court. Sham structure allegations, as I've said, those are obviously always a constant risk. You need to make sure the agreements are drafted right. It's very easy to fall into one or the other. You might even start as a contractor with the right intentions, all drafted right, but the relationship evolves and they turn into an employee. You can't simply ignore that. You have to address it, either move them onto an employment agreement or, go and get some advice. You can't ignore those things. And so, contracts, employment contracts, independent contractor agreements, they're living documents like every contract. I always say they're living documents, contracts. They're not set in stone. They need to be reviewed. They evolve with the relationship, and they need to be relevant to the circumstances. So, and it's only when you get termination fights, when relationships really break down, and usually when there's a disgruntled contractor or employee in the practice, and all of a sudden everyone starts to look for their best hand in the cards, and that's when the lawyers get involved, and that's when their lawyers start picking apart your agreements, and we start looking at the agreements for our clients, going, well, is there any areas of concern or so forth? So we'd rather not be doing that during a dispute. We'd rather that be doing that proactively with people, doctors, medical practices coming to us and say, hey, how much would you charge to review these documents? Here they are. Get a quote. What's the worst could happen? You get a quote. There's no obligation to proceed if you don't want to. But I mean, the reality is you are going to proceed because, it's going to cost you a lot more than a review down the track when you realize that there's an issue with it.
Absolutely. And to that point, Michael, I suppose prima facie this makes the medical clinics and the doctors generally being high income earners a good target for people to come and say, well, look, oh yeah, this guy is making money, so I'm going to have a punt at making a claim or otherwise. So if your structure is not properly safeguarded, it's not clean, you don't have good governance, you inevitably remain susceptible to all these risks. And this happens all the time. It's just generally that sort of segment of the market where they are seen to be doing well, and they're, much as obviously that's very proportionate to the effort and expertise that they have. But equally, a sort of thing that say, oh, look, I was a nurse, I was a contractor here, and so on and so forth happened. And, I think I've got this claim on foot. And so, like you said, defending it is going to be definitely a lot more expensive than having to be ahead of the curve. So before it occurs.
So, talk about cash flow, profit, and the illusion of growth. Talk to your accountant, talk to PJ about these things. If you're not happy with your accountant or you think that another accountant could do better, perfect time is to contact PJ and ask him, have a chat. Because cash flow, when you're not on top of it, when you don't understand it, when you don't know how much money you've got coming in versus out, and you're not on control of those things, or you haven't got someone who knows what they're doing and control those things, it really should be the owner of the business and directors. But you're going to have issues around unpaid suppliers. You're going to have partner tension, rushed contracts, self-drafted contracts, which are never a good idea. You can talk to your accountant and your bookkeepers and people who are looking at your money and your tax position, and if they're not reaching out to you or they're not being proactive, or you don't hear from them, it's not a good sign. And I think often I think of I give the benchmark for accountants and tax and financial advisors, and I often have a picture of PJ in my mind. Yourself, PJ, it's the highest standard that anyone can expect, and really they shouldn't expect anything less.
Yeah, that's. Thank you, Michael, for those remarks. And to the point, yes, one of the things that we often see is when the client's wanting to plan for exits, bringing the financials in order and everything else, and making sure that the systems that they operate well. And then that's where we sort of say, okay, Michael, now how do we need to structure this exit? How do we draft sell proposals? How do we, what are we actually trying to sell? And to your point, it's not uncommon. We always, the founders of a business always overestimate valuations. The other party will always want to sort of, look for avenues to negotiate it down to at a discount, and all these other things happen. But at the same time, if you have a pretty neat operation by way of governance and by way of financials, so you've got a business that's much more sellable than if you didn't have these structures in place and a systematic process. How many people I've contracted, and the incoming person can safely presume the operation without having to worry about, well, okay, this was a problematic employee, I'm going to stand them down. I'm not going to inherit all the other contractors out of this business. So the importance is really that, where you have structured everything so neatly from the start, and then you go, well, look, you can safely take over this because I've done things, I've done it all very methodically. So that's where doctors, they often occupied to think about these issues. They're just really busy in the middle of it, generating billings. It's obviously quite a taxing profession, very long hours, extremely demanding mentally, physically, and psychologically. They've got the illusion that this thing is operating and is making money, and it's clearly translating to some cash flow freedom in their lives, but that's where they need to sort of look at and go, well, is this even a profitable business? How am I going to pivot this? Can this run without me? And clear goals, clear financial, clear governance, and clear documented process to operate, especially when you go above a sort of 1.5 million to 2 million revenue, you are considered to be a relatively sophisticated practice. So that's where they need to get involved and get things checked. Am I operating this right? Is this even in the correct format and structure by way of business?
Yeah, that's right. And having that structure set up right, really from the beginning, is it sets you up well for the next topic, which is, the question of medical practices and doctors bringing in other partners. If you've got a good structure there, like you've got, for example, a really good shareholders agreement that allows people to buy in and out, exceed, get in and out, that makes things so much easier and so much more flexible, and often doesn't exist. However, it's an important document, as so is a unit holding agreement if you want to set it up in that structure. They're very important, and keeping your ownership separate and distinct by way of unit holdings, if you want to set it up in that way. But you always got to think about when someone's coming, what are they buying? How is the value set? What decision rights do they get? How do they leave? And that's going to maybe look at a few key documents, the constitution, maybe if you've got it set up as a company. Without documents in whatever structure it happens to be, the dispute is really just a deferred dispute, because eventually something's going to go wrong. And even if it's just that one person wants to get out, there's no structure for them to get out that's going to be a hotbed for a dispute, regardless of how nice and cooperative the people are. I've seen the best friends and the best people that get along and partners still end up in arguments with each other because they can't work out how to resolve these mechanics. And having those documents in place, they don't cost a fortune. They don't take enormous amount of time to draft. It's amazing documents available, and they can be tweaked to suit your practice, but just get them done, and this is the key point. It's just getting the documents done, and it'll take a lot less time than people think it will. And that's something that's often, needs to be put across to them.
Absolutely agreed, Michael. Yeah, very valid points. And you and I day to day operate with situations and circumstances that these are largely neglected. Generally, I can say 95% of the time, they convert to a form of litigation, which is awfully costly, detrimental to the reputation of the business, and extremely demotivating for doctors to see I've worked so hard and somebody can come and disrupt my operation and create so much stress and anxiety for me so easily, just because I could have or should have done something with relation to it, and I didn't.
Yeah, and that comes to the last topic before we finalize today. Exit sales. What happens if something goes wrong? You really have to think about, is it going to be a sale of a practice? Is it going to be a forced sale? Is a court going to order a winding up of a business sale? Is it going to be a partner buyout? Disability, death, illness of an owner, family issues affecting an owner, marriage issues, other family issues, disputes between co-owners. There has to be structure there, and what makes a practice more valuable and easy to sell or transition is having the structure.
How these assets are treated, even in family disputes, and you just pointed out that we have an up and coming situation, the case for a client where, he sort of thinks that, the businesses that he's worked out is completely not subject to his matrimonial asset disputes, and all the other things now could have been instructed differently. Was the proper advice received at the very start or not about all of these issues? So, and another point, Michael, is that I do encourage all our clients to engage with us and yourself with relation to sell and exit. Often, should they start negotiation prior drafting contracts or not? Should they even, sort of in principle agree to deals without engaging with a legal professional? It's not as simple as selling a piece of real estate and say, oh, look, I found a buyer and could you draft a Section 32 for me? It just really doesn't work in commercial undertakings in the same format. So speak to us before you start planning your exit. We will help you in terms of how to structure this, how to negotiate this, what sort of things to look for, what sort of pitfalls to avoid, what sort of promises don't make out there, and And ultimately, this results to a much smoother transaction rather than sort of doing your thing on your own and then coming back and say, oh, look, say, I think I just need a contract. And not really. There's a lot more to that.
Yeah, look, I totally agree. Don't just think about growth, think about exit, think about sales, think about how it's going to work practically. And I'd just like to say thank you so much for coming on today, PJ. It's been a pleasure. I
Not
look
a
forward to
problem.
having you back on again in the future. And I'd like to say, wish you a good night, and I look forward to seeing you.
Thank you, Michael. Thank you for having me.